Okay, so we're slowly wrapping up Wednesday here, guys. By the way, tomorrow's Thanksgiving. The stock market's closed. Happy Thanksgiving, by the way, guys. Happy holidays. Hope you're all doing well out there. So, listen, we have to break down some stocks, the indexes here, some earnings that came out this week, as again, we're slowly wrapping up Wednesday, heading into Thanksgiving. So, yeah, let's do it. Guys, if you find value, hit the like button. Make sure to subscribe and get your free stocks from Moomoo. You have a couple more days to do that. Use the link down below. Once you open up your account and fund it with at least $100, you get 5 free stocks and a $30 cash bonus. And fund your account with at least $1,000, you get 10 more stocks, and overall your uninvested cash for now will earn up to 8.1% APY, which, guys, it's a no-brainer. And again, you have 2 or 3 more days to do it, so use that link down below or go to starsurfs.com/moomoo. And with that being said, cheers. Let's get right into the video. So check it out. It's about 1:30 p.m., almost 2 p.m. on the East Coast right now on this beautiful Wednesday afternoon. And as we're heading into Thanksgiving tomorrow, guys, every index in the U.S. stock market is in the red except for the Russell. The Russell's up 0.1%, but QQQ's down 1%. The S&P's down 0.4%. The Dow's down 0.3%, and we have the VIX up over 4%. And it looks like here gold is up a little bit as well. Silver's down a bit. So, yeah, we're down across the board for the most part after hitting all-time highs earlier today on SPY and on the Dow Jones. You heard that right, guys. The Dow and SPY both hit all-time highs earlier today, but now we are red pretty much across the board, giving back all the gains from this morning. You guys can see that here on SPY on the intraday, on QQQ on the intraday, the Dow as well, right? You name it. We hit highs this morning, but we've been downtrending ever since. So with that being said, we have to break down a couple of companies, a couple of stocks, all of which reported earnings this week. So let's do it. And you guys might remember we covered all these stocks on Sunday before they reported earnings, and now we have to do the follow-up as the earnings are out. So CrowdStrike, CRWD, reported earnings yesterday, and quite frankly, I think all of these reported earnings yesterday, and CrowdStrike's now down almost 6%. We're down to 343. We hit 373, actually higher than that, almost 380 a couple days ago. So now we're down about 9-10% from the recent high. And CrowdStrike, let's come down here and see, guys, they reported adjusted earnings per share of 93 cents versus 81 cents expected on sales of $1.01 billion versus $982 million expected. So they beat EPS and they beat on revenue, and they see Q4 revenue of $1.02 to $1.035 billion versus $1.03 billion expected. Not bad. On non-GAAP EPS of 84 to 86 cents versus 86 cents expected. So not bad. Guidance there looks like full year revenue guidance is better than expected. All right, that's good news. 3.92 to 3.93 billion versus 3.89 billion expected. On adjusted earnings per share of 374 to 376 versus 363 expected. So they beat EPS, beat revenue, guided up for full year revenue and EPS, which is good, and Q4 guidance is pretty much right in line. So I would say, judging based off that, CrowdStrike did pretty well, and now we're getting a healthy pullback. Maybe because it was priced to perfection, the stock was a bit overbought heading into earnings, so we had a good report, good revenue, good guidance, EPS, all that, the whole 9 yards, and we're getting a healthy pullback after. So this could be setting us up for a nice bounce off this 330, 335 level, right by the 180 SMA on the 4-hour chart, which, guys, mind you, this is held for a couple of months now, right? This trend has held. So CrowdStrike, I think buyers might come in anywhere from 325 to 335, that range. And personally, guys, I'm long. I've been in the stock now for a couple of months. I bought initially at 235 and 248, I believe. I bought more. So I'm in it. I'm up a lot, and I might even consider adding more if it slips even more from here. So CrowdStrike, we got their earnings yesterday. Pretty good. Looks like Dell also reported earnings. Their stock's down 12% right now. So Dell, which I'm not surprised because, look, we actually covered this in my video on Sunday. We talked about how we were heading into this week pretty overbought. We actually filled the gap already heading into the week, right? This week, we filled the gap from 135 all the way to 150 pretty much. You guys see right here, we filled that entire gap. So we already came into the week pretty much overbought, priced to perfection, and boom, when that happens, earnings come in, maybe not so hot. This could happen here. We're now down 12% on the day. So Dell reported adjusted earnings per share of $2.15 versus $2.05 expected. So that beat, but they missed on sales, 24.37 billion, excuse me, guys, versus 24.65 billion expected. So they missed on sales, beat earnings per share, not bad. Anything here on guidance? Not seeing anything on guidance quite yet, but we do have Barclays adjusting price target to 115 from 106, keeps their equal weight rating. Citigroup boosted it to, actually, no, they cut their target to 156 from 160. Okay, not a big deal. Citigroup actually still has a buy rating on the stock. So I'm watching DELL here on the weakness for a relief rally. I think this dip will also get bought up. You know, I'm looking to see if it recovers back over this 180 moving average at about 130. Ideally, it recovers over there, and we'll see where it goes. So I'm going to set my alert at 130 on DELL. We'll see where it goes. We also had Dick's Sporting Goods report earnings, I think yesterday, and the stock momentarily went bananas. I mean, this thing went up to 236 in the pre-market yesterday, but since that point, we have sold off down to about 210. We saw a spike this morning to 225, but now we're back to 215. So we're pretty much back to where we were right before the earnings came out on DKS. So we've given back all the gains, in other words, and that's after they double beat. 275 adjusted EPS versus 268 expected on sales of 3.06 billion versus 3.03 billion expected. So double beat for Dick's Sporting Goods. They see full year EPS of 1365 to 1395. Let's see here, which that is up from the previous guidance on EPS, it looks like, which is good. Maybe that's why the stock momentarily shot up. I don't know. But now, like I said, we're back down. But yeah, DKS, guys, looks pretty decent. You know, we broke out, and mind you, we covered this in the video on Sunday. We broke out of the sideways channel. We were trading sideways for months. We broke out of the resistance, 220. Well, that was one of the resistances, right? We broke out of it. We saw a nice pop all the way to about 240, 235, 240, which was the high from back in the end of August, early September. And now we've cooled off. So I'm looking to see if DKS can retake 220. Very big spot. If so, if it could break out of there, we might start running quite aggressively. So I'm going to set my alert at 220, maybe for a move back to 230, 235, maybe higher. So that's DKS. BBY is another one that reported earnings. Seems like it's unchanged right now at about $87 per share. This is Best Buy, guys. So they reported, let's see here, guys. By the way, run those likes up. Make sure to subscribe here on YouTube if you haven't done so already. Very important, guys. Hit that subscribe button. We're on the road to 50,000 subscribers. So Best Buy reported adjusted earnings per share of $1.26, which missed the $1.29 expected, and sales came in at $9.45 billion versus $9.36 billion, or $63 billion expected. So Best Buy missed EPS and they missed on revenue, and it looks like they see full year 25 comparable sales of down 3.5% to down 2.5%, which is not good. Let's see here, guys. Looks like U.S. stocks have a slow start as Trump tariffs, yada, yada, yada. That's something worth watching on a side note here, guys. Looks like they also cut their full year 25 revenue outlook a little bit, which you never want to see. Not the end of the world, but they did cut it a little bit. So that's probably why the stock isn't moving much, right? But with that being said, we're still maintaining this trend, the higher low that we talked about in recent videos. And on the 1-year chart, we're still holding the trend as well. We're above the 180 SMA. So who knows? Even though the earnings were a bit disappointing, maybe this thing rallies in due time. Who knows? Never say never. As again, it's holding trend as of now. So I'm going to set my alert at $90 per share. Mark is at or above, and we'll see where it goes. And last but not least, guys, we have Abercrombie and Fitch, ticker symbol ANF. This stock has been crushing it. Maybe not so much in the last couple of months, but when you pull up the 3-year chart, oh my goodness, is this, a clothing company, or is this a freaking AI tech stock? I mean, what the heck is going on here, guys? But here we are. ANF is exploding, and the company reported earnings yesterday, and the stock's pretty much unchanged, still in this wedge that we talked about on Sunday. You guys can see right here, pretty much still in that wedge. So ANF reported, let's see here, folks, if I can find it. Where the heck is it? Come on. Let's see here, guys. Looks like earnings per share of $2.50, which came in a lot higher from last year. It looks like last year, same quarter, it was at $1.83. So that's good growth. EPS-wise, sales $1.21 billion, up from $1.05 billion from last year. Looks like they increased their full-year outlook to net sales growth outlook from 12 to 13% to now 14 to 15%. That's good. Sees Q4 net sales to grow 5 to 7%. Not bad. So yeah, that's pretty good out of ANF. Looks like, again, we're still in this wedge, but I'm going to set my alert for now at $160, and we'll see if it's able to get out of there. Let me set my alert. Mark is at or above 160. And yeah, man, if that breaks the recent high, this could really start taking off again and continuing the big massive move that it's seen over the last couple of years. So what do you guys think? Crazy numbers from some of these companies. Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe. Join the email list. It's free. I'm actually sending you guys my top 3 stocks every single Monday right to your email. Join it, guys. It's free. Linked in the comment section, also in the description box down below. And you might as well get on the free stocks from Moo. Clock's ticking, guys. Open up your account and fund it with at least $100. You get 5 free stocks and a $30 cash bonus. And fund your account with at least $1,000. You get 10 more stocks. And overall, your uninvested cash for now will earn up to 8.1% APY SPY, which, guys, I'm telling you, it's a no-brainer, and the clock's ticking, so use that link or go to stocks.surfs.com/Moomoo. Get your stocks, and with that being said, cheers. I'll catch you guys in the next video.